Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. We have 4 days left until Q4 2023 earnings. I'm very excited. I don't know if you're excited. I'm sure you're excited if you're watching this video. I'm also kind of scared because, as you guys know, if you follow the channel, the only thing in my opinion that matters is guidance. And I have no idea how guidance is going to happen. I think guidance is going to be in that 20 to 23% range. But if it's not, that's going to be bad. I don't think it's going to be below 20%. If it's above 20 to, 23 to 25, 26, 27, 30%, it's going to be fun. So we've got a lot to talk about in terms of what's going to happen for Palantir earnings. Palantir Weekly tomorrow night, Friday, 11 p.m. We'll be getting into all of that stuff, doing a full earnings preview. Today, I want to address 2 bear cases that came out from Citigroup and that came out from RBC. Now, our good friends at Citigroup and RBC have beautiful price targets on Palantir at $5 and $10. So I want to talk about the note they put out today, why they think that Palantir is still a sell, why they think $5 or $10 is still reasonable for the company, and basically discuss how they're thinking of Q4 earnings, my thoughts on, what it's going to mean for Q4 earnings, and then we'll go from there. And before we do that, we're going to get into price action. Don't go anywhere. Let's get into it. All right, so let's get into price action for Palantir. Now, before I get into it, real quick, I always forget to say this. I say this at the end, but let me say this in the beginning. If you're not subscribed to dailypalantir.substack.com, free email newsletter every single day, get it around 10, 11 p.m. Eastern Standard Time, please subscribe to that. It's basically 5 minutes of a read every single day, and it kind of sums up what you get in the videos. If you don't want to watch the video some days, you can get it in the newsletter. So please make sure to subscribe. We're very close to 3,000 subscribers on that. It's totally free. It's never going to cost money. There's never going to be a paywall of content. And I write the whole thing. ChatGPT doesn't write it. I write it. So it does take me like an hour or 2 hours every day to make sure it's good. So please make sure to subscribe to that. dailypalantir.substack.com. It's in the description. All right. Palantir, $16.29, up 1.21% on the day. If we go to the SaaS sector in general, we can see that we've got pretty much all green, even if the green is small. Some companies 1%, some companies 0.5%, but most companies are green today. Now, why is the stock market relatively green and not as bad as it was yesterday? S&P at 487, up 1%. S&P was at 482 this morning. Well, Jerome Powell, some little macro news just to understand what's going on with Palantir, said that the Fed is likely not going to cut interest rates back in March, or going into March. We are 2 months away from March. The market was pricing in a March rate cut at about 77%. People thought it was going to be a March cut. Then 2 weeks ago, it went down to 45%. Now it's at about 30%. Maybe we're going to get a March cut. And there are some macro reasons for why we could get a March cut, a surprise March cut, now that Jay Powell said we're not going to get it. But more likely than not, this cut's going to come in May. As a result of that, the market kind of tanked yesterday because they were like, all right, well, if we're not getting this March cut and we're not going to be able to get interest rates to come down, which is very good for growth names like Palantir. Why? Because even though Palantir doesn't have debt, they are selling to customers that do have debt. For those customers to procure their software, they need to make sure the cost of capital is low so that they can actually finance the ability to pay for Palantir software, which is not cheap. And if interest rates are high, it's hard for them to do that. And in general, the macroeconomic environment for stocks and equities gets more exciting. There's $6 trillion on the sidelines. If rates come down, they're getting 5.5%. That 5.5% turns into 5%, 4.5%. It doesn't look that fun to have your money in money market funds. That's $6 trillion. Right now, it's about 5.96 trillion. Starts to get flooded into the markets, and that helps companies like Palantir that have AI attached to their name and also that are, quality companies that are doing well and people want to take a risk on them. So interest rates need to come down. Now, granted, even though Jay Powell said interest rates are not going to come down in March, he seems pretty adamant that inflation is inevitably going to come down, which is really all that matters at the end of the day to get interest rates to come down. So although we're not going to get a March cut, that's why we saw the decline. That's why Palantir almost hit $15.99 today. I think the market is recognizing eventually inflation will come down, rates will come down, and we don't need to be that, scared. February tends to be not the best month for tech stocks. So we're at all-time highs on the major indices. It is something to think about. We had Microsoft and Google earnings, which were good, not amazing. Apple, Amazon, and Meta are today. I'll be live streaming those on the channel as well. So if you're watching this after the earnings, you can click on live on YouTube and watch that as well. So we'll see what those 3 companies say. But so far, economy's fine. Stock market's fine. I say fine in a vacuum. Perceptually, it's okay. Now the question becomes where are interest rates going to go over the next 6 months? And if they start coming down and Palantir has good guidance on Monday, then Palantir might have a really good 2024. We'll see what happens. Okay, let's get into the main news of the day, which is these reports that came out against Palantir. So let's first look at RBC. Okay. So they have 4 main components to it, and I want to read through all of them and discuss and then give my thoughts on it. So here's what RBC said. Government data suggests to a downside in consensus for quarter 4. Based on our tracker, estimated government quarterly contract value implies modest growth, a slight improvement from last quarter, largely driven by the National Health Service deal. That's the big UK deal. We note, based on publicly available suggesting information, that the NHS contract did not start until November 22nd, meaning Q4 contribution is likely negligible. This is probably correct. I mean, we probably aren't recognizing a ton of money from Q4 for the NHS contract, so that's not like big news to me. Excluding NHS, our tracker also said mid-teens year-over-year consistent with last quarter would be happening for government growth. In other words, Q4 government revenue growth could end up at or below consensus, modeling 14% year-over-year growth versus 12% last quarter. I'll talk about that in a second, but I just want to read the second point. More details on the NHS contract. Based on publicly available documents, Palantir was awarded a $226 million over 3 years and 3 months contract. Notably, this is below the headline amount of $410 million over up to 7 years that was provided in the NHS press release. While unclear, we believe that the mismatch reflects the potential for consumption over commitment and the option to extend the contract out until 2030. Okay, so 2 things there. First, on the NHS contract, the amount of money we're getting from the NHS contract, again, to me, and you can agree or disagree with this, but I felt it really doesn't matter. What matters is we got the deal against all the politics. That was just a win for the company. It doesn't matter about the stock. For me, as a long-term shareholder, it's a win for the company. And Brazil, Canada, there's so many countries that have socialized healthcare services that could benefit from Palantir, but we need to fix the NHS first. That's a 5-year story to me, and if that plays out, I think that's going to do very well. And even though it's only $226 million on contract, they're going to be able to get a lot more money from them if they fix the job. And we had a video about 2 weeks ago showing that the early results indicated that whatever the NHS is doing is starting to work. Maybe it's related to Palantir, maybe only partially related to Palantir, but that story is going to play out. And it really doesn't matter for Q4 revenue or for, next year's revenue in the context of that deal, because that deal to me is an anomaly that will lead to many, many billions if it actually works out correctly. Having said that, this report is correct that we're probably not going to get a notable contribution on revenue numbers, top line growth because of the NHS deal. And then on government growth, it's probably not going to have, significant contribution as well. Now, in terms of their 14% year-over-year growth, which is above 12% year-over-year growth that we got last quarter, I don't know what's going to happen for the government. If you saw my last video where I was answering retail shareholder questions, my biggest concern or question was, what's going on in the government? Are there actually a bunch of competitors we need to worry about, like the Wall Street Journal article suggested? Are you guys, do you have lock-in with the military, DoD? And then internationally, if this is the time where the world is the most crazy, chaotic that it's been, can you give us some clarity on, are the Estonias, Finlands, Lithuanias, Polands of the world actually procuring your software? So 14% year-over-year government growth is not amazing, but it will be offset, I believe, by AIP and commercial growth, hopefully at closer to that 35 to 40% range just in the US, which should even it out. Now, if that gets bigger and the guidance for that is bigger on the commercial side, then the government growth is going to be offset. My belief is that if they can grow commercial at 35 to 50%, specifically in the US, for the next 3 quarters, they will subsidize the amount of time they need to figure out the international government growth. What is wrong with international government growth? I don't really know. I mean, you could chalk it up to a bunch of reasons, but I really don't know. This is the question I would want to get from the management, which is just like, why aren't you guys getting more international government deals? And we saw there was some controversy in Germany and France, and they want to build their own systems, and they're going to inevitably fail, and they're going to have to use something like Palantir. But, some countries don't like Palantir. That's fine. But there's a lot of other NATO countries that have a very good relationship with Palantir. Are there deals there? Are those deals tiny? I just don't know. And so this is the clarity we need. But RBC is correct that government growth, if it slows down, then that is something to think about in the context of Palantir. Now, here's what they say on commercial. Our conversations indicate no change in momentum in the commercial business since the launch of AIP and bootcamp. So they think that bootcamps really has had no impact. I disagree, but we'll talk about it. Despite the new bootcamp strategy, the number one challenge cited by customers is maintaining in-house skills and competency centers, ultimately leading to an over-reliance on Palantir's professional services, that's the consulting part, which are viewed as expensive. We would also highlight the ongoing pushback on the lack of pricing transparency and competitive differentiation with AIP. I'll talk about that in a second. One interesting data point was that Palantir seems to be vying to compete in deals outside of its core competency, offering examples offering to build custom apps for resource scheduling typically served by HCM software. Stepping back, while we remain cognizant of the potential for bootcamps to lead to an increase in near-term pilot activity, we remain cautious on the sustainability of commercial growth given high levels of competition and product market fit outside of large non-technical enterprises. And then finally, let me just read this last part. Shares trade at a 14x enterprise value to calendar year 2024 revenue, a significant premium to the peer group, which in our view does not fully capture the risks related to the business model, high levels of competition, and SBC. Our $5 price target implies a 3x multiple in line with the peer group. Okay, so first of all, real quick on the multiple. The 3x multiple to me is just generational companies that people actually care about, companies that are known on the street, companies that retail is excited about, companies that institutional investors are excited about. They're not going to trade at a 3x multiple. And if you're waiting for a 3x multiple on Palantir, you can wait for a very long time because, I mean, we barely got a dip to 1590. That dip was eaten up within minutes. Kathy bought 1 million shares that day. Like, there is appetite for this company. And if you're a company that has captured the imagination of investors, people are going to pay a premium. I mean, OpenAI is trying to get $100 billion valuation. They did $1 billion in revenue. Is that good? Is that bad? It really doesn't matter at the end of the day because what price do you pay for it and what price do you sell it? So in the context of Palantir, I think there is a fair value to it. And I've historically said 15 and below, given the growth rate, is my buying price. And I've nibbled in the 16s and 17s, but that's really where my buying price is to buy a large amount. So there is overvaluation and undervaluation, but $5 is a bit ridiculous. You're just not going to get those levels. And if you want those levels, you're going to be waiting forever, but no one's going to, help you wait because people are going to move on with their lives. So that's the 3x multiple. In the context of the risks, they said it would be business model, high levels of competition, SBC. SBC is not a risk. SBC is now 22% of revenue. SBC has come down significantly, and SBC is in line with other software peers, right? So when they say this is, how our multiples in line with other software peers, SBC is way better or in line with the Snowflakes, Datadogs, Databricks of the world. Snowflake's actually increasing their SBC. So that's not a risk to me. Business model, I mean, either you agree qualitatively that the business model is good or not. You can agree or disagree. That's fine, but that's more subjective. And then high levels of competition. Again, this is something we got to figure out by management. What Palantir's Alex Karp has said is that we are building products that are so good that the competition is afraid to compete. When you have a CEO that is that arrogant about his product, and we'll talk about the boot camps, the boot camp model to me proves the underlying foundation of that arrogance to be correct, given they're doing it and then everyone else is copying their boot camp strategy. I think there really isn't massive amounts of competition. There is competition. The Microsofts are competing, Amazon's competing, Databricks, so everyone's competing in this space. But there's enough of the pie to go around, and Palantir is enough of a name. Dan Ives has told us that they're the name that comes up along with Microsoft with the CIOs. So to me, it's not some random company that's like no one's ever heard of when it comes to implementing enterprise AI. Palantir's up there. And as long as Palantir can convert those names, which is the biggest risk in my opinion right now, then Palantir is going to do very well for the commercial business. So that's what they said about the EV multiple stuff. Now let's talk about the actual commercial business. So they say that we don't see any change in momentum from the launch of boot camps, and we don't think the client conversion rate essentially is going to be that strong. People are just, basically they're saying that yes, there are more pilots, but the lead from pilots to actual contracts and the sustainability of that commercial growth and product market fit is not going to exist outside of large non-technical enterprises. So this is where either we will be right as Palantir bulls or RBC in the short term will be right. It all depends on guidance. That's it. Because from what I've seen, we did a video 2 days ago about Ted Marbury, the head of Palantir commercial, who put out this picture, right? And this picture was basically saying, hey, we are killing it in boot camps. We're doing very well. And he's basically teasing other software companies that you have to, start swimming in the water with us, because at the end of the day, you're not going to be able to win unless you're playing the game that we're playing. What is the game we're playing? A game that is focused on product, a game that is focused on actually showing off your product to the customer, not promising them some fancy thing that's going to happen, but actually proving to them that your software can do what they need to do. This is the picture that he put out. And again, he said a bunch of different things in this tweet, but ultimately he said, now everyone is surfing in the bootcamp wave. That's a good thing. Redefining the software procurement process to have more accountability to value and pace serves us all. Come on in, the water is warm. And these are quotes from people just showing you how important the bootcamps have been to them in their process of implementing enterprise AI platforms. I believe the bootcamps are working. My baseline assumption is a 10% conversion rate. So let's say they did 500 bootcamps in Q4. I don't think they did. I think they did like 300, but let's just use 500 as a round number. 50 of those will end up becoming net clients. I think maybe 100 of those to 125 of those get on pilots, and then you convert a significant amount from those pilots down to actual customers. What is the pricing strategy on AIP? I don't exactly know, because to get AIP, this is confirmed by CodeStrap, you have to have Foundry, because AIP is working with the ontology to actually be able to deliver the results to you when you type in a user query. So I don't know how they're selling it. I do know the average price, average client for Palantir right now is paying about $3.2 million a year. And that number needs to get to, 3.7, 3.9, 4 million over the coming years. That is going to increase top line growth. If they're able to do that, then I believe AIP and the commercial product is going to be successful, and RBC is going to be wrong about this. Their argument that client conversion is not happening, either, guidance is going to show that it is happening and they're ramping up the boot camps, or it's going to be wasted money on these boot camps that aren't really resulting in conversions, or the conversions are like 4 to 5%, not really 10%. You've got some people that I've talked to, just in the Palantir community, think that they think the conversion is closer to 30 to 50%. And that's where we're going to see massive guidance. I'm not that, I don't necessarily know if that's going to happen. I'm not that sold on that. I'm being very conservative here, thinking 10% of the 300 people you put into a boot camp, the product is strong enough, the culture is strong enough, they understand the vision, they're able to go to their C-suites and say, hey, this is what we did with Palantir, and in 8 hours, we were able to create this much value. If we actually just bought the damn software, we can probably do a lot for our organization. Remember, this is an exchange of value. This is not just buying something for the sake of buying it. This is buying it because it's actually going to work. I think Palantir is going to prove that this shit is working. And I think Karp has been cocky enough saying, we're going to be a $60 billion company at the Axios Summit. I don't think he's just saying that to say that. I really don't. And as a result of that, either RBC is going to be right or we're going to be right. And maybe RBC is right in the short term, but I think in the long term, Palantir will win with this bootcamp strategy because other software companies are emulating it. And you only emulate something that's working at the end of the day. Final thing I'll say in this report is that last thing on the government is if government DoD spending, particularly on AI and machine learning in the United States, is going higher, going from 0.015% to close to 0.5%, that's going to be billions of dollars that are entering into the commercial sector. We have the public sector. We have Palantir's FedStart product that's going to take advantage of that, helping other clients and startups get some of that money, and then they will be able to get some of those deals. We got $280 million in September. We got 160 for 250 just for military and AI research. We got a $115 million extension from the Army Vantage. We got a $30 million NIH contract. We're not getting all of that $30 million, but that was the deal. Like, there is a lot of contracts that the government is willing to give out based on AI, machine learning, especially with the Biden administration and likely whatever administration is next, enabling AI to become a big part of the discourse. So money is going to be spent. And if that money is going to be spent as long as Palantir is in the running for a decent amount of those contracts, the government business is going to grow as well. And that might help offset some of the losses from the international government growth that we're not seeing. So overall, I think this report from RBC for $5 is a little silly, but it all depends on Monday with what Palantir says. Final thing right here from Citi that I wanted to show. So Citi on Palantir, we are incrementally cautious into Palantir 4Q 2023 results as we believe an underwhelming federal deal activity quarter, even with the NHS contract, should offset strength in U.S. commercial. They then say the sales multiple of 15 times for just teens of top-line growth maintains a sell and high-risk rating and a target price of $10. So they have the same concern as RBC, which is that even if U.S. commercial is growing very well for Palantir, the lack of government growth is going to offset all of that growth, and that's going to lead to top-line growth of being in the teens, which is not going to be very good for the stock, given the multiples already at 15x. Now, I agree with them. The thing is, if guidance comes in very well, whether the guidance is because of government growth or because of commercial growth, it's not going to matter. Like, you could have a Q4 that's growth, 17, 18%, which is not the best for a high growth tech company, and then guide 25%, and the street doesn't care. The market is forward looking. They're gonna be like, all right, so you ended 2023. This is what you ended with. This is the growth you're telling us now. And then it gets into all the qualitative stuff of like, what's going to happen here? What contracts are you in the running for? All this stuff, S&P inclusion, Titan. You got all these catalysts coming up. But guidance is going to be the defining factor of if the street is able to overlook and justify the multiple and expand the multiple based on the coming growth. And we'll find out about that on Monday. All right, that's it for me. Thank you, everybody, for being here. I will see you guys later on Palantir Weekly. We will do a full review Friday night, 11 p.m. Eastern, on everything going on into earnings. And then I'll be live on earnings after hours, 3:30 p.m. to break down what's happening with Palantir. Make sure to subscribe. DailyPalantir.substack.com would mean the world to me. Thank you all for being here. I'll see you guys in the next one.